Let's talk more about this now, what it could all mean for the economy and markets. Andy Blocker is Global Head of Public Policy and Strategic Partnerships at Invesco, and Dan Primack is Business Editor at Axios. Dan, let me just start with you. What are you hearing in terms of how this would exactly work and hit maybe Silicon Valley or startup culture in particular, and just kind of anything else that people think would be impactful?
Yeah, I mean, for starters, when we refer to this as the Harris economic plan, it's the Biden economic plan. All the details that Robert just mentioned were all in the White House's fiscal 24 and fiscal 25 budgets, neither of which they fought terribly hard for in Congress. And I understand the Trump tax cuts are going to expire in a year, so things will change a bit. But Harris herself hasn't come out with anything new on capital gains. Her campaign has simply said, we agree with what the White House had proposed previously. Silicon Valley's gotten really freaked out about this unrealized capital gains tax, which you can understand, right? A lot of them own a good deal of stock in private companies. One thing to note, though, in addition to the $100 million in wealth, which is where this kicks in, you have to be over 80% liquid for it to kick in. In other words, if you are worth $100 million, but almost all of that is because of your startup's stock, you would not apply for this, at least immediately. There's kind of some deferrals that get kicked in.
And Andy, a lot of people have suggested, well, could this apply to home equity, for instance, if your house has gone up in value, but that as current policy, homes are often excluded. Obviously, this would only apply to people under over $100 million. But to Dan's point about the slippery slope, once you start taxing unrealized capital gains, does that open the door, pave the way for that to kind of go more mainstream in future years?
No, I think you're onto something there, Kelly. I mean, look, these are very aggressive policies. There's a discussion about, can you really tax unrealized gains, when you can and when you can't? And look, you definitely have to have that 80% liquidity requirement, because you can't have people having to sell property to pay their taxes, right? So on that sense, will have to be dealt with on the details.
I think, Dan, there's often a lot of confusion around this, in some part generated by the media, because we often cover pay packages of executives whose pay might not actually be realized. It might be a lot of unrealized gains, for instance, but it's often treated as, oh, so-and-so has this many hundreds of million dollars or this many billions of dollars. And do we need to start making a distinction between unrealized and realized gains? Or I don't know. It's just, I think it's all playing into this idea of how much sort of liquid money or cash people really have.
It does. And then you have the secondary piece where obviously people can take out loans. And what does that mean? Because that's debt. Is that actually considered an asset as far as the IRS or the White House would be concerned? But again, it goes back to, these are proposals that have been around for over 2 years. They haven't really gotten anywhere with a Democratic White House. They came from a Democratic White House. I think kind of what I'm hoping for, and Iman kind of mentioned, is we're not going to get any specific economic policies tonight from Kamala Harris. That's not what this speech is for. But do we get some kind of anything new that comes out in the next week or two, which differs her economic policy and tax policy from the current White House, outside of the price gouging stuff and being a little bit tougher on certain mergers, although the current White House is suing to stop the Kroger-Albertsons merger already. Yeah,
Andy, I'm also curious about what's going to happen with the expected to expire tax cut package that Trump had passed, in particular things like SALT. Now, Schumer, I thought, had indicated that perhaps he was going to find some way of restoring those deductions, which could amount to quite a big savings for wealthier individuals as well under her administration.
No, I think definitely Senator Schumer and a lot of the New York, New Jersey delegation and a lot of the states where this is really impactful, they're going to be pushing hard to make sure they restore some of those tax breaks under SALT. But it costs a lot of money. And if you were going to extend all the tax cuts or for the Trump tax cuts, it'd be about $4.5 trillion. So it's a lot of money. And Trump would try to do that, or most of it. Well, Vice President Kamala Harris, her thing is, anyone making over $400,000, she doesn't want to extend those tax cuts. Corporations, she's always said, going from 21 to 28%. But at the end of the day on this, it's too early to kind of tell here. You're going to have full control of Congress, the House and Senate, and the presidency to enact your plan. So we're waiting here to see how this election kind of goes out. But the process and the makeup of the entire government has a big impact on what can and cannot happen.
Absolutely. These are kind of wish lists, as they always have been in budgetary exercises and so forth. But these are where the rubber hits the road, depending on how big the gains are for either party who takes the White House. Guys, thank you both for now. We'll leave it there. We appreciate it. Andy Blocker and Dan Primack.